So what the heck happened is the question that people are asking after the federal funds rate was cut by Jerome Powell and the Federal Reserve yesterday. Well, what the heck happened was that the Fed met and cut interest rates that they charged for the federal funds by a half a point. This was really great long term for the economy. We're starting to get away from that higher for longer. Rates have been the same for 14 straight months. And of course, mortgage bonds follow typically what the Feds do. But however, as we have said before, and if you've watched other videos that I've done, the federal funds rate is not the same as the mortgage bond rate. So they do not always go in tandem. What we had consulted with our clients earlier was to take advantage of the pricing a few weeks ago because we were projecting the cut and we baked that pricing in before a cut actually happens. And we were exactly right this time. We're not always, but here's the thing to remember. No one can predict what rates are going to do. No one can time this market. It's best to be pre-approved, understand your buying power, and know when the right time to make the decision to lock a rate, purchase a home, or refinance is. And we do that by having pre-purchase or pre-refi consultations so that we can go over the numbers and help you make a mathematical decision and not a rate-driven one. Rate-driven decisions typically do not work out well for most home buyers. So the good news, we're finally done with higher rates for longer. The Fed has begun rate cutting on the federal funds rate. The reason mortgage rates actually went up yesterday after the Fed cut the funds rate is that the bond market didn't like some of the comments that were said post-Fed cut. The Fed meets on lots of different things, not just the federal funds rate. The comments and the market commentary after the meeting kind of spooked the mortgage market, and so rates went up. They may continue to go up a little bit this week. I think over time, we're seeing a downward progression. But if you're trying to buy now, or if you're trying to refinance now, it's a great time. But don't try to time the market. It's not smart money to do that. If you want help with that, if you think the time is right, it may be. We have finally gotten rates where we haven't seen in a long time. It's a great time to be in the market before all the competition comes in and everyone tries to follow the herd, compete for homes, run prices up, and make the whole process more stressful than it needs to be. We're here for you to help, to educate, and inform. That's what we do. Team Chet, Chet Man. Talk to you soon.